Pass the eval. Blow the funded account. Pay for the reset. And do it all again. If you trade prop firms, you know that loop. I lived it too. You're at the screen all day. Every tick is a decision. And somehow, one bad afternoon undoes a whole month of work. So here's the question I kept asking myself. What if the execution just ran, whether you were watching the chart or not? The problem usually isn't you. It's two things colliding. Discretionary execution, you pulling the trigger by hand, and a trailing drawdown that creeps the floor up under your equity all day long. Under that pressure, everyone breaks their own rules eventually. That's not a character flaw. It's a structural mismatch between how you trade and how the firm's rules work. And it costs you the reset fee every time. So I built the thing I actually wanted. A set of systematic strategies, where every entry, every stop, every target is written into the code. Not a feeling, a rule. 6 strategies, built into 8 ready-made portfolios, already sized for different account sizes. You don't design anything. You don't tune anything. You pick the portfolio that matches your firm and your account, and the position sizing is already done for you. On the futures side, there's even an end-of-day guard that flattens everything before the session closes, so you're not holding in to the very rules you're trying to respect. Let me just show you. No slides for this part. Say you're on a 50K Apex account, end-of-day trailing. You add the strategy to the chart, and right away, you see it. Entry markers, a stop-loss line, a take-profit line, painted at every signal. That's your signal source. Nothing hidden. Here's a position while it's live. The entry's in. The stop sits below it, the target above, and the trade just works its way between them. When price reaches the target, the position closes on its own. And when a trade goes the other way and hits the stop, it closes there too. I'm showing you that loss on purpose, because the whole point is that the risk gets cut hard without you lifting a finger. Now the part people don't believe until they see it. Sizing. You open the settings, you pick your preset, and the position size updates everywhere. In one click, 50K, 100K, 150. Conservative or aggressive. One drop-down. Done. And to make it hands-off, you set one alert. A single line the strategy writes for you. That alert fires, and it routes your order to the broker automatically through Traders Post for the futures prop firms, or Pine Connector for forex and MetaTrader. Signal to broker while you're somewhere else. And this isn't a mock-up. These are real signals landing on real funded accounts. Buy, sell, exit, logged, with the contract, the price, the time. The system did that. Not me sitting there clicking. All right, fair question. Does it actually hold up? 2 things, and they're different. First, the tested record. This is the deep backtest. Every trade, the full equity curve, the wins and the losses with realistic costs baked in. You're looking at it right now, not a promise. The record. Second, and this one matters more, it's tracked independently. This is Traderzilla, third party, following the forex champion portfolio forward. I don't get to touch those numbers. And then there's the part that's real money. These are actual payouts, Lucid, FTMO, and a funded trader certification from TopStep. 3 different firms, not one lucky account, 3. My name's blurred out because these are my own. I trade this system with my own capital. That right there is the skin in the game. One more thing, and this is the part that actually matters if you're tired of resets. We didn't just backtest once. We ran the portfolios through thousands of simulations to ask one simple question. Across all those runs, how often does the account pay out versus how often does it blow? And the gap is not close. On the balanced 50K portfolio The model shows payouts outnumbering blowups by hundreds to one. On the forex champion portfolio, no blowups at all across the entire simulation. Account survival across a 3-year horizon sits up in the 90s% on most of these portfolios, and the median time to your first payout in the simulation runs anywhere from about a month to a couple of months, depending on which one you run. The median modeled net per year is on screen for each portfolio. And I want to be precise here. These are simulated 50th percentile outcomes, not a forecast, not a promise, but that is the entire design goal. Survive first. Pay out consistently. Second. So here's what a day actually looks like now. The old way was 12 hours in front of 6 screens, reacting to everything that moved. Now, I check the alerts and the fills in the morning, call it an hour, and the system runs the executions, whether I'm there or not. The scripts fire through the webhook. That's the reason I can step away from the desk. And that's the honest reason I built it this way. Not to get rich quick. To take the decision-making out of my own hands, because my hands were the problem. Now let me be just as honest about the rest. This is risk capital. You can lose it. Prop firm rules vary, and they change, so check your own. This isn't magic, and it isn't financial advice. It's systematic execution, a tool,